Coming up on Over a Barrel 2024, was it a boom or a bust for your pocketbooks when it comes to the local prices at your gas pump? Oh, we've got those details and a whole lot more coming up right now on Over a Barrel. Well, welcome to the program. I'm one of the two co-hosts. My name is Matt McClain. The other guy right there in glasses, hey, his name is Patrick DeHaan. How you doing, Patrick?
I am great, Matt. It was a terrific holiday for you as well. Hopefully, I don't know about you, there were some folks on the road this holiday season. We were not alone.
No, we were most definitely not alone. I drove across 3 states, had some fun, met a lot of vehicles. So yes, everybody was out there driving and going to over the river and through the woods to grandmother's house we go. I think that's pretty much what everybody was pretty much doing all the way around. All the convenience stores that were open, even on Christmas Day, packed with people.
Yeah.
So I know that I wasn't the only one doing anything along those lines. How was your holiday?
Well, I same way. I don't think it was 3 states, but 2, Indiana and Michigan, are states I jumped over the border to. And you know what? It's always crazy when you cross. In that specific instance, you and I are both really close to borders.
Oh
You
yeah.
always know where it's cheaper. I was able to basically spend 40 cents a gallon less. I actually got a 10% off my fuel fill up. I spent $30, and the Pay with Gas Buddy program combined with deal alerts, I stopped at a station that was basically giving me 10% off and combined it with rewards there too. So hopefully you have a story. I mean, and by the way, saw a new retailer that had moved into my market, swung by the new store there. And by the way, there's a lot of new C stores popping up.
Oh
Long are
yeah.
the days, when folks were thinking that this was somehow going away. This trend of convenience was going away. It is here. I don't know about you. You probably had some really nice pit stops too.
There is actually a new Valero station that is very close to my house, about 10 minutes, and it's on the way to Grandma's house, if you will.
Beautiful.
It is on the way. Stop by there, fueled up, and I thoroughly enjoyed it. Obviously, it's always good. I'll tell you this: convenience stores are awesome. It's always good to go in and if you need a restroom break, if you need to grab a snack, especially on holidays, because a lot of times some of your other places might be closed. Not usually a convenience store. They've
Yeah.
usually got things rolling around to where if you need to eat, you need to do something, you need a restroom break, whatever, you need to refuel. They are always there for you, always in that right now kind of a mindset. So yeah,
And you had a really
I
good
agree with that.
Valero experience, you're saying?
I did. I did. I thoroughly enjoyed everything. Have no complaints at all. Great fuel mileage too, by the way.
In
Just
and
want to throw that
out,
out there.
and hopefully, a market leading price. And by the way, we
Yep.
are ending the year. Speaking about prices, it's been not too bad of a year. There've been some bumps here and there, but all in all, Matt, we'll get into that here. But some very nice trends this year, and maybe even a sneak peek at what's coming next year as we get towards the
Ooh.
start of 2025.
I am looking forward to hear. All right, so let's get right into it. I'm looking forward to this. All right, let's talk about the past.
Yeah.
Patrick, was it a boom or a bust for our pocketbooks over the past 12 months?
Well, Matt, I'll start out. You and I basically a year ago were talking about what we expected for this year. And fast forward, the year has gone by. And so we had expected the yearly national average in 2024 would be 338 a gallon. Now, you probably haven't done the math, but most folks probably hadn't either. The yearly national average this year was actually below our expectations, 333 a gallon. If you go back to our 2024 fuel outlook, I think it's
Oh,
probably a few pages down. So, if you want to scroll there away from my
tell me
my
where to stop.
mug,
Hey,
yeah.
I know
Oh,
that guy.
he looks strangely familiar.
Yeah, tell me
Um,
when to stop scrolling.
keep going. You'll
All
see the
right.
2020. There we go, right there. So that was basically, if you
Ah,
scroll down an inch, there's that 338 a gallon mark I was talking about. That is what we expected when we put this forecast together a year ago. By the way, if you're listening on Spotify, we have our 2024 fuel outlook, which we posted a year ago today. Again, the national average we predicted would be 338. We were a little bit too high on that, Matt. I think that's pretty much a fudge factor most people probably would be okay with, right? The yearly national average ended up being about a nickel lower at 333 a gallon. I hope that 2025 is going to be as easy to forecast. I mean, we weren't too far away from those marks, which I'm really happy with. And
Yep.
most importantly, as we talk about year in review, there were no record setting prices in 2024, unlike 2022 when the national average hit $5 a gallon. So, all in
We've
all,
known each other for a long time and we do pick on each other when we're off the air, but I got to give you props
oh,
where
here we
it's
go.
due.
Oh, I
You're
was waiting to
usually
get picked on.
no, 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 no. It's a compliment this time. It's a
Oh,
rare
yeah.
thing. So mark it down, make sure you document it. But you actually usually do hit that mark pretty well on an annual basis. I'll give you credit where it's due.
Well,
You've done a good job.
let's talk about what went right and maybe what didn't go to expectation, because I think most of the time, a lot of what we saw in 2024, and then we can delve into the difficulties of making a forecast a year out. I mean, back a year ago, you'll remember that the Hamas war on Israel was
Yep.
just starting. It had started just 2 months before our outlook came together. And so, a lot of the expectation was that's a region of the world that can be very destabilizing to the rest of the Middle East. But the expectation was it was not in the interest of Israel, nor Hezbollah, nor Hamas, nor Iran for that to become a much bigger situation than it was. And that played out to expectation. So we're happy that that did not really cause a lot of deviation. A lot of uncertainty, too. If you go back to the fuel price outlook here, I'll share my screen. And so
Okay.
that we can delve into some of the concerns last year. If you go back to the volatility, and by the way, this is still available for anyone on our website, the Gas Buddy blog as well. We talk about a lot of the seasonality. We talk about the new challenges that lead to a high level of uncertainty. The global economy has seen slowing growth. Keep in mind, this was last year. The Federal Reserve has suggested it may begin to cut interest rates in the year ahead. So, if rates are cut too quickly, there could be upside risk to our outlook. Basically, the Federal Reserve took a more cautious approach on when they started cutting. And so there was not any upside. They actually pushed their cuts down the road, if you'll remember, Matt. Um, by the way, I don't remember when the cuts started. I think it was what, July that the cuts started?
That sounds about right. It was a summer month. That much I feel confident in saying. Was it June, July, or August? I don't remember, but I think July sounds right.
Yeah, so the Fed stuck with its plan, actually pushed it a little bit further out and didn't start cutting rates until midsummer, which was later than expected. But largely, the economy, Matt, went as expected. I think the wild card was China's economy and the weakness there. That was more kind of a development. And so that kept a little bit of downward pressure on prices. So we were actually, our forecast was prices would be higher. They ended up lower. And so part of the reason we missed to the downside and that prices were lower than we expected was partially because of China. China's weakness in their economy, not only that, but their transition to EVs really accelerated much faster than expected. I think global Chinese demand for gasoline may have actually even peaked. So there's that. There's refinery outages, which we mentioned here. Global refining capacity has improved. There have been additions to the global refined capacity, and that was the good news, Matt. Is global refining capacity did improve. There was a little bit more breathing room. But all in all, as we go through the rest of this forecast, I mean, everything that we had expected here, we did expect that OPEC would increase production. That didn't end up happening. As if you've stuck with this podcast,
Yep.
we talked about OPEC has continued to kick the can down the road. And as we now go into the next year, Matt, OPEC has actually continued to cut that or push the resumption of OPEC's
To
production down to
what? To
April.
the end of 2026? Is that what I remember?
Well, some of them. Now they did say they were going to start. Well, here's what they did. They delayed restoring output until April, but April of
Yeah.
2025, by the way. So for the year ahead, that's going to be another wild card. Is OPEC going to stick to the plan of April 2025, or will they extend those cuts all the way through the end of 2025? So that's something to think about. Now we obviously talked about the EV transition. We expected that the pace, see in 2023, we expected that the EV transition would slow in 2024 and potentially into 2025. And now that is definitely something that we see. And that's probably more a function of the election and the change in policies that we
Yeah.
foresee coming. But I mean, all in all, Matt, I was real happy with the outcome this year. We also did break it down, and I looked at some of the states because one thing that was new in our forecast last year is that we forecast every state, the yearly average in every state. And California, if you look here, we expected the yearly average would be somewhere in the ballpark of 426 to 465 a gallon. And if we go over here to the Gas Buddy website as we close out the year, we are basically right at about 430 a gallon. So closer to the low side. And if we quickly pick California as an area to, zoom in on how do we do over the course of the year, let's look. We said 425 to 465. We did spend a little time over $5, but all in all,
Goodness.
it looks like we probably averaged, I would guess, somewhere in the middle of the line here, probably about 475. In fact, if you look, every day since September, the average has been under 475 a gallon. So we probably ended up averaging close to the top side of what we had expected this year. So as we look forward to 2025, Matt, we did that again this year. Every state,
Whew.
we have a nice target range. So
Almost
I should
550 a gallon. It literally took my breath away when I saw the
Well, but
almost
the
550 a
good
gallon. I'm
news
like,
is,
oh,
is California peaked at 544, but it only spent, let's see,
that's a lot.
March through May, March, April, May. So 3 months, a little over 3 months above $5, but the rest of it below that. One thing I'm going to ask you, Matt, is
Uh-huh.
before, the outlook is on the cusp of being released. By the way, check the Gas Buddy socials, our Facebook, our X account, LinkedIn, TikTok, boy, wherever we Instagram. That is where you're going to be able to find the Gas Buddy 2025 fuel price
And
outlook.
Threads. You're on Threads too, I've seen.
Threads, but also if all the socials are too hard to find, you can always go to blog.gasbuddy.com to check what we're expecting next year. So we'll talk about this again, Matt, but I'm curious where you think we expect the yearly national average to be next year. You've not seen the figures.
Nope,
We haven't put
I
them
have
out
not
just
seen.
yet. Take a guess. Do you think we expect next year to be higher or lower?
All right, let me calculate an
And I'm going to
incoming
have to put my
administration.
poker face on a minute so I don't give it away.
Let me put on my incoming administration. That's going to change a few things down the road. I'm going to say slightly higher.
Well, we'll wait and see. It's going to be,
Ooh.
it's coming out shortly. So blog.gasbuddy.com. We are now throwing it up there on New Year's Eve. So for those, as you get ready to go out on the town, or if a nice quiet in, our fuel price outlook will be coming out New Year's Eve.
And he truly has not shared this with me, by the way. I really am in the dark. I just want you to know I really
Everyone
don't
is in the
know.
dark, though.
Yeah,
Matt, you haven't asked for it, but others have. We are
I'm sure.
withholding
Yeah.
until the 31st. We have to get all our numbers, Matt, and we have to make sure it looks beautiful. And over the holidays, as you might know, as I've just discussed, there has been some time off involved.
Sure. And that's an understanding. But I'm just gonna go and say slightly higher. And
We
and
will see. Ladies and
and
gentlemen, you've
that's
just
my thought.
heard Matt's projection. He believes the national average next year will be slightly higher, and we will compare that here on our next episode. So also wait for us to drop. We will also be posting an episode basically right on time with the release of our forecast, and we'll delve into some of the details. But again, kind of reviewing 2020 format. Keep in mind that 2024 was far closer to normal, but there still were a little bit of imbalances brought on, right? The economy was now in the slowdown phase after heating up during Russia's invasion of Ukraine, after the economy reopened from COVID. Believe it or not, that's still part of why gas prices were a little bit higher than normal last year in 2024, this year, actually. So,
So let me ask a question that I think you can answer.
ooh.
Um, is it always more difficult in the forecast when you know that you have an administration that is changing over in the White House every 4 years versus the other years where it's a continuation of the administration that you're already familiar with? Do you always find it a little more difficult?
Well, that's a great question. Unless it's the exact same candidate, Matt, running for a second term, there is always a difficulty when the White House changes over. Doesn't matter who it's to, because unless it's the same person, there are likely to be changes in policy. So, that's the difficulty is going from 4 years of one person to 4 years of another. Strictly speaking, it does not matter. It could go one way or the other. It could go the other way to the other. anytime there's a change, like you and I, we
Yep.
think differently. So anytime there's going to be somebody different in the White House, they think differently, and that may impact what they believe. So yes, but there are even bigger risks when it goes from one political party over to another, right? Because they
S-
are profoundly different and they may implement different policies.
So, what has been your success rate during those first years during the administrations for
Well,
each
all
new
right. Well,
person?
let's
I'm
look at
putting him on the spot, ladies and gents. I'm putting him on the spot. I can't help it.
all right. Well,
I'm
let's
just
look
curious.
because I mean it's a good question. A lot of folks may probably wonder the same thing. What is our historical record on making these predictions?
Yep.
So if you're online, if you're not watching this as a video, you can check it out on YouTube. You can also um, check it out on our socials. But here's our outlook, Matt. And I was trying to scroll just a little bit. There we go. So now you can see the forecast when the forecast was made. So basically, this was
Hmm.
before the year even happened. The Let me get the key up here too. So the actual prices in blue and the forecast prices in red. So last year, for example, 2023, we forecast the yearly national average would be 349. It actually was 2 cents higher at 351. 2022, we forecast it was going to be 399. It was 395. Of course, that was, I mean, really, Matt, if you look at 2020 and 2021, they were tremendously difficult. We were at the height of COVID one year.
Yeah,
We
I'll give
Yeah,
you an
so
asterisk
look
on
when
that.
our
That's not
forecast
really
came out,
fair.
right? Our
Yeah.
forecast came out January 1, 2020, before anyone knew about COVID. And
Right.
so that changed
That's not
everything.
fair. I would never hold. I don't think that's not fair
And
to hold you to
no,
that.
but I'd like, yeah. So, like, if we explain though,
That's a
that the
yeah.
reason is because in 2020 we had an unexpected, almost depression in the economy, and then in 2021 we rebounded from that depression, and that was always going to happen. There was going to be a huge change in the economy when it was shut down and when it was reopened. Those are the shock waves that are still, still having somewhat of an impact. So, if you go back to that prior, we were off by 8 cents in 2019, a little bit higher in 2018. I mean, every year is a little different because even under, President Trump's first term, there were sanctions on Iran, there were attacks on Iran. I mean,
Yep.
so, every year is a little bit different, but the last couple of years have probably been some of the more difficult to forecast because of those shockwaves I mentioned. They
So
bring,
going out of the Obama administration into the first term Trump administration would be the end of 2016 into the beginning of 2017. So 2017 was the first year of the first Trump administration.
right.
It looks like you forecast 249. The actual price was 239.
So it's a little bit lower. Yep. And
It
then it flip
was.
flopped the next year. Next year, we forecasted it lower, but it was actually higher.
Yeah.
And then
So I mean,
it
it's
ended up going
tough.
down a little bit for 2019. So, you know,
But in the big scheme of things, you're not off by miles at all. I mean, you're doing an annual forecast. I mean, look, I'm a business owner. I don't sit there and predict myself 12 months from now for anything. I do a 30, a 60, a 90. And then on a 6 month, I put like a few goals because 6 months from now, the world will probably be very different. Life has taught me
I mean, to your
than
point,
how
a
that's my
year is
point.
like a
Yeah.
crystal ball. If
Yeah.
everyone had the foresight, I mean, think of it this way, Matt. Some of the hot stocks out there, like Nvidia, some of the semiconductor stocks or the tech stocks, if you knew a year ago that it was going to just skyrocket, I mean,
Right.
obviously it's a little bit different than commodities, but I mean, you jump in and
I mean, the
only
fact that you're doing a 12-month thing and able to get it within even a remotely close to ballpark, I don't see anything that's more
Well,
than a
I
dollar
mean,
off. I don't see
to
anything
his
that's really
credit,
more than 50
that
cents
two
off.
cents seems small. But if I were to tell you that 2 cent error, let's see here. If we do 2 cents times the average amount of gallons purchased on a day, that 2 cent error amounts to $7.5 million a day. If you extrapolate that to a full year, our forecast was off by about 27.4 billion. So that 2 cents, if you think of it differently over the course of
Right.
365 days, that's roughly a $27.4 billion difference in what Americans spend on gasoline. So, but keep in mind, of that 2.7 billion, if we do the amount of gasoline that Americans consumed, let's see here. If we do some math here, see how much we spent over $420 billion on gasoline.
Wow.
So that's what we saw in 2023. So I guess that what did I say, 2.7 billion?
Yep.
Then it
That's
sounds
what
like
you
a
said.
much smaller, it sounds like a rounding area when you're talking about 400, well, it was actually closer to 430 million that we spent on gasoline this year.
I mean,
Just
yeah,
imagine that. The nation spent just under half a trillion dollars on gasoline in 2024. It's truly, and the thing that's amazing, Matt, is our demand for gasoline is going down. People have work from home flexibility. Newer cars are getting more fuel efficient. More cars are mild hybrids. More cars have like a 30 to 40-mile EV range. So ultimately, that's increasing the efficiency, and that's even something that one has to think about when putting a forecast together. Like, what are Americans buying? Is it more fuel efficient? And that's kind of the slow decrease in demand that's now happening year after year as Americans continue to get more efficient.
yeah, that's a very, very, very good thing to point out all the way around. I'm telling you, this is for people who don't like, they just show up at the gas pump and they pump
Like
gas,
most of
right?
us.
Right, like most of us. But when you really stop and think about all the different layers and the things that can impact a price, but not only that, how it's refined, how it's brought into the system,
Yeah.
right, to be able to get to that pump, and just a little tiny anything, 2 cents a gallon difference, and the impact that that can have. That's a really big deal when you really stop and think about it from that perspective. And most of us don't, like, we show up at the gas pump, we put the card in, we go pay at the cashier, however our choice is.
Yeah.
We fill up our tank and we move on, right?
Well, and
But
keep in mind
it's a
that
big
2
deal.
cents, what did I say? That 2 cents adds up to $2.7 billion. So, Matt, now think about the crazy thing is, to your point, people just pull up to the pump and don't think that that 2 cents adds up. But and by the way, if you were to, use the Gas Buddy app and deal alerts, like I was saying, I've literally filled up not for 2 or 3 cents a gallon off, but 10% off. I paid for a $30 fill up and I literally got over $3 back between the Pay with Gas Buddy premium program, between the deal alerts, which are exclusively in the Gas Buddy app. I also plug that together with the station's loyalty rewards. So
Yep.
if you're thinking smart, and a lot of the folks, on this podcast are probably ahead of most folks because they're already
Right.
listening, but tell your friends, tell your loved ones out there. I mean, you're spending more at the pump most likely than you have to. Pair it with the Pay with Gas Buddy card, pair it with deal alerts, pair it with loyalty rewards that, various stations offer. You're stacking up discounts. And instead of just swiping a credit card that gives you, 2% back, that 2%, I did way better. I got 10% back my last visit. It's absolutely incredible.
That you bring that up. I mean, like, I do this, I do that. That's exactly what I do, right? So, like, maybe I'll get 10 cents a gallon off because of a rewards thing because of that particular type of gas. Then if you use a Gas Buddy card, you'll
Yeah.
usually get more. It's a good way to do it for sure.
Well, and absolutely. And I was going to quickly pull up this receipt here to show you that over the last, now I'm going to try and, get rid of my vital information here. But I want people to see that this is not just, a fake thing here. If now you saw where I filled up there, but look at this. $28, 28.26. I saved $2.90. I basically got a free gallon of gas. So, I mean, this adds up. Oh, that's real close to your Matt's trying to sneak attack there, but that savings, it's 10%. So, absolutely incredible, Matt, and you are muted. So, there's that too, but 10% savings is way better than 10-cent savings.
I was having a problem with my IFB and being able to hear you, so I was
You,
actually
you that
standing
that
up
is
to.
perfect. That is a behind the scenes look at the Over a
Yeah,
Barrel podcast.
yeah. That's why those of you who saw me, I'm like this. We've got IFBs in our ears, so I'm like, all of a sudden Patrick disappeared, and I'm like, I can't hear him anymore. So I had to fix that. So, and then he just happened to minimize the screen I'm like, thanks,
I
Patrick.
minimized it too quickly. But
Yeah,
anyway, all of that to say, it's definitely a mindset as you go to the pump. You should always be thinking about that trip down the road. I use the Gas Buddy app, Matt, in a different way. Most people just look at the stations around them, but keep in mind there's the map tab at the top of the app that you can look at the map and see prices and manipulate the map. That's exactly what I do. When you're on a longer road trip, when you're going from Michigan through Indiana through Illinois, instead of looking at the stations around you, I load the map listing and then zoom in to roughly where I know gas prices are cheaper. And then you can save a bunch. But, back to back this up again, to reiterate, our fuel price outlook will be dropping here next week. Get ready. We'll talk about it here on the next Over a Barrel podcast, but all the details on gas and diesel prices, gasoline prices, we break down by the holiday. We tell you the confidence level, and we also will break down every one of the nation's 50 states, Matt. So even if you're in California where everyone always is ribbing me because, oh, that doesn't apply here. Well, first of all, the national average does include California, but I get it. California is always more expensive. And then the other cool thing, Matt, for some of the largest metro areas in the country, cities like Chicago, Cleveland, Tampa, Washington, D.C., San Francisco, L.A., we also tell you the highest that we expect the average price to go. So you can make a budget around it. For California, I don't want to get too much into the weeds, but you might see over $5 a gallon again. So all of that is going to be coming out next week. There's 20 pages, Matt, of really in the weeds information. So people should know exactly what's coming up in the year ahead.
All right. So now that we've talked about all of that, let's go ahead and get into the remainder of the year, right? We're moving out of 2024 and into 2025. What are prices looking at more in the interim? Maybe we've got some New Year's Eve plans. We've got other plans.
Yeah.
What are we looking at for the remainder of 2024, the next several days?
Well, Matt, I'm glad you brought that up because as we stand here, the national average has been doing this dance around $3 a gallon for the last couple of weeks. Now, I will say that there were some refinery snags that I believe could aggravate prices in the Midwest. I'm not sure the timing on when that will happen. The wholesale price of gasoline in this region here, Wisconsin, Michigan, Indiana, Ohio, the Great Lakes, did just shoot up about 8 to 10 cents yesterday. But there was a big increase that I was not expecting ahead of the holiday of Christmas. They jumped the gun a bit. That earlier jump was likely to allow them to take a week and a half off between the holidays. So I'm torn on whether prices in the Great Lakes are going to jump until the new year, maybe Monday or Tuesday. So if you're in the Great Lakes, you might want to fill up this weekend because of the refinery snag that happened. There was a natural gas leak at the BP refinery in Northwest Indiana. So just stay on top of that. That leak really doesn't usually have much of an impact. But again, if the leak is big enough and they have to shut down the flow of natural gas to a refinery, that's problematic because refineries use natural gas as a feedstock to power and heat some of the elements in their refineries. So that can be problematic. But for the rest of us, Matt, we're going to probably continue to drift a little sideways. Just yesterday or the day before, it was on Christmas. The national average fell below the $3 a gallon mark on Christmas Day late in the night. So, we continue to do this dance, Matt, right around $3 a gallon. I'm not expecting a huge jump, but like I said, if you're in the Great Lakes or down by you in Kentucky generally, they follow what the rest of the states do. But for the rest of the nation, if you're on the coasts, we'll just say mostly stable. Except the Great Lakes, you could see a spike there. Nobody else should be seeing a big spike in prices, at least for now. Oil prices are still holding, I think, back at above $70 a barrel, Matt. And I'm going to get a nice little advertisement here. Up 83 cents a barrel to $70.50 a barrel.
I guess that could be worse, right?
So, I mean, hey, it wraps up a decent year at the pump. It wasn't a great year. But the other thing to consider, Matt, we probably mentioned a couple episodes ago, worth mentioning, Americans generally are working fewer minutes to buy a gallon of gasoline. And that's a good thing because even at $3 a gallon, you don't feel like as much of your income is going to fill your tank up.
It's a very valid point. Very, very valid point. Well, listen, Happy New Year, Patrick.
You too.
I think 2025, we are going to have all kinds of fun on this particular podcast. And I am very much looking forward to that as well. And I know that you who watch and listen, make sure that you stay tuned because we may have all kinds of surprises as we go along. Who knows? I might be able to drag Patrick out of Chicago and we do some kind of a trip down the road. We'll find out. We'll see what happens.
And we'll find out to the answer of your prediction for 2025.
Yes.
But for all those who are listening and following, we appreciate your support. Throw a like, a follow, subscribe, review us on Apple Podcasts or Spotify. Always a pleasure, Matt, to be next to you.
Yes, sir. All right. Well, that's going to do it for Over a Barrel. Happy New Year. We will see you next year. Have a good one.